Hey everybody, welcome to the Our Town podcast. I am super excited today. We have Sarah Perkins from Blue Water Credit here, and she is going to go over all kinds of practical tips and tricks on how to improve your credit. She's going to go over some myths versus reality and some insider insights and even some client success stories. I've used Blue Water Credit for probably since 2013 now, and they have helped many of my clients, and on average, I see them raise credit scores about 100 points. So I have had some people that just really couldn't qualify to buy a home, and then 6 months later, they were actually able to qualify to buy a home because they followed the process and they did everything that Blue Water Credit told them to do. If you like the content that we're bringing to you, we would love it if you shared, followed, gave this out to everybody that you know. If you have anybody that has questions about getting their credit repaired, they can always reach out to me directly and I can introduce them to somebody over at Blue Water, or you can give them a call directly. Their info is down below. So now enjoy the show. Well, thank you so much for coming in today. I really appreciate it. You guys are a local business that's been around kind of a long time, right?
Yeah, we just celebrated our 15-year anniversary this July. So yeah, we've been around for a while.
I think I started using you guys around 2013, 14-ish.
Okay.
Does that sound about right?
Yep.
Okay.
That sounds about right. Mm-hmm.
And I had a rep come into the lender that I was working for at the time, and she was telling me all about it. And I was like, oh, it's a local company. I don't have to call some weird company in the Midwest or something like that. So it's great that you guys are here. Now, where are you guys located?
Out of Roseville, California, yes.
Okay. And so what exactly do you do to help people increase their credit?
So it usually starts with a risk-free consultation. So we have a credit advisor go through their credit report and identify items on their credit report that are obviously holding their score back. So there will be items that maybe we suggest that they do certain things on that we are not able to necessarily fix, but we are looking for derogatory items like late marks, collections, charge-offs, medical debt, or even if they have something like identity theft. So we're able to then open disputes with the credit bureaus and the creditors themselves, dispute them, and hopefully get them removed from their credit report. So in this, it will increase their score. We also do debt negotiations. So we know that part of the process of possibly increasing the score or maybe just getting approved for a loan requires certain debts to be paid off. So we can work with the creditors on reducing the amount that they owe, settle it, and possibly even get a deletion from their credit report. And then lastly, we have just recently partnered with an attorney's office out of Los Angeles, and they take on what are called like FDCPA violation cases.
What's all that stand for?
Yeah, so that there's a lot of laws in place and how collectors can contact you, like how many times they can call you in a certain period of time, what kind of information that they're able to give over the phone, or if you don't pick up. So they know the habits of a lot of the major creditors, and they can identify certain accounts on our clients' credit reports, initiate a letter to these creditors, and they're oftentimes able to get the accounts deleted, the debt waived, and even cash back to our clients. So we've worked with them for like about a year now, and we just figured out over the last year, we have put $165,000 back in our client's pocket in just like cash awards, received. And then I think over like 5,000 negative accounts removed by their efforts. It's something that we haven't been able to do with certain kind of accounts. So it's definitely a new service that we're able to offer our clients and obviously get some money back in their pocket.
Yeah, that's fantastic.
Yes.
So where does the money come from? What do you mean by that? Is it let's say they have a credit card that they were back on or something, and they have violated the law somehow, and they were able to get the money back in that situation?
So how it works is they do a negotiation process with that particular creditor. The creditor agrees to waive the debt that they owe. The attorneys bill their fees to the creditors, so our clients don't have to pay anything out of pocket. So they charge the creditors for their fees, and then according to the FDCPA, they are allowed so much per violation to receive a cash award back. So I think in most cases it's like $1,000 per violation.
Wow.
So they know, like Bank of America might be notorious for calling too many times in one day or not sending the correct debt validation letters. So they are very well versed on their behaviors and normally don't have to take it as far as a lawsuit. They just have to initiate a letter to them.
Okay.
And so it's just an add-on service that doesn't cost anything else to our clients, but it has proven to be, definitely beneficial in getting tougher accounts removed and, like I said, money back into our client's pocket where they can hopefully purchase a home with that, pay for closing costs or whatever it may be.
So what is, there's all these credit cleaning agencies out there. One of them, I think, just went out, one of the biggest ones, what was it, Lexington Law or something?
Law, yes.
Didn't they just go out of business?
Yes, they are going out of business.
That was all for predatory or something. They were doing something wrong. What were they doing?
Yeah, so there's a lot of rules that go around with the credit restoration business, how you can collect your fees. You cannot collect any fees upfront for services that you haven't rendered. So that's why we always have to bill in arrears or not not providing the results that you are advertising. I think I heard somewhere that like Lexington Law, the average amount of time a client is in their program is like 18 or more months, where at Blue Water Credit, we strive to get clients out in 4 to 6 months. We know time is of the essence. We want to make sure that we're getting them back to you so they can get into whatever loan. So I think it had a lot to do with, their practices, how they were collecting fees and not providing the results that they were advertising.
I noticed, so back before you guys were in business, I would send people to Lexington Law and they would only go after like one account at a time and they would drag everything on. And I remember when that rep came to visit me, she said that we attack everything all at once. And I thought that was, well, that makes sense.
So that I think is why a lot of times those clients were in programs along with Lexington. They would choose maybe a particular creditor and just focus on that one creditor with each of the 3 bureaus and then move on to the next one, or just work with all the items on TransUnion and then move over to Experian. So yes, they were prolonging how long that they were in the program by picking and choosing which accounts that they were working on. But yes, at Blue Water Credit, we dispute all the negative accounts all at the same time with all 3 of the bureaus. We're using multiple ways of disputing the accounts, whether it be by phone, fax, online, email, whatever resources we have, we're using all of those and thus getting our clients out of the program quicker.
Yeah, I noticed that. You guys are pretty diligent about getting it done.
Yes.
And I get those constant updates. Now, are you able to pull people's credit for them?
So normally, if they do not have a credit report that is supplied by a lender, because we do need the credit report to accurately determine what items they need fixed, there's a couple options. We do have a way to do a soft pull through TransUnion, but that really only gives us a picture of what's going on with TransUnion, where we know some items might not be on TransUnion, but on Experian or Equifax. We will also point them to like Identity IQ or a service where you can pull a credit report. Again, a soft pull for like $1, and you get a very clean report that is all 3 bureaus. Another option is through annualcreditreport.com. A lot of people are familiar with that you used to get one free credit report from each of the bureaus once a year. Throughout COVID, though, they changed that and you can actually pull one every single week. And so that is supposed to go through 2023, so the end of the year. The only downside with that credit report, you're not getting a score, but it's a very detailed report that lets us know when the derogatory item is supposed to come off, which is very useful, and a lot more information that some of the other credit reports don't provide. But yeah, you can pull one once a week until the end of 2023 through annualcreditreport.com.
Wow. Okay. And then a lot of people will use things like Credit Karma, and they'll come to me and they'll say, hey, my credit score is a 680. I have this app called Credit Karma, and then I'll pull their credit and it's a 580. Well, why? What's the big difference between Credit Karma and an actual mortgage, when we pull a mortgage credit report? What is the difference?
So in the credit reporting world, there are a couple different brands of credit scores is the easiest way to describe it. But the two main players out there are going to be FICO and Vantage. So a lot of people are familiar with FICO. It's probably used in 90% of lending decisions. And that is where your mortgage score comes from, is FICO. Even within FICO, I believe there's like 20 plus different versions of
Models?
a FICO. Yes.
Wow.
So you have like for an auto loan, for credit card, for mortgage. So most people, when they maybe see their FICO score, maybe their bank provides it to them on a monthly basis. It's normally just their model, I think 8 is what it's called, but that's not used for the mortgage. And then going back to Credit Karma, they use the Vantage model. Really, they're all looking at the same items like payment history, credit utilization, mix of credit, but they are weighing each of those categories a little bit differently. So if they are putting maybe more weight on a category that FICO doesn't necessarily put a lot of weight in. So that can cause a variation in score. I think we have seen up to 100 points. So they are looking at the same things. They're just not weighing them the same way in determining their score. So Credit Karma, yes, it's good for knowing what's going on with your credit, looking at trends, making sure that you're staying on top of your payments, if something new gets updated. So we don't discourage people from looking at it and using it for tracking purposes. But if you're wanting to truly know what your mortgage score is, you either have to go through a lender, or an easy place to go to get all 3 mortgage FICO scores is through a website called myfico.com. It costs, I think, about $60 if you just want a one-time pull, but you'll get all of those different models, I think 20 plus models, and you'll just have to look for the mortgage one. Or you can do like a monthly $29.95 and get a new update every month. So sometimes people in our program, we do encourage them to pay for that service so we can watch the trends as things get deleted from their credit report. So then we know if you tell me you need your client at a certain score, we know when they're at that score, and we can stop our program, hand them back over to you for you to pull a hard pull for their credit.
Okay. And I've noticed this trend lately, and it all started, I don't know who was advertising it, where, hey, we have this instant way to bump up your credit scores. And people were putting all of their phone bills and electric bills and all of the stuff onto their credit report, which we can't use anyway. We have to get them to remove it, which does end up affecting their score again. So what was that, and what are they trying to do with that?
So that sounds pretty much like the Experian Boost. I
I
feel
think
like that's what
that
you're
is.
talking about. And again, going back to the different models of score, Experian Boost first was only helping your Experian score, and it was that scoring model 8, which you don't use for mortgages. But the downside with it is you would have to supply them with your banking information. They go in and basically scrub your bank account, and they're looking for items that you're paying on a recurring instance, like your rent or utilities. And then, yes, putting those onto your credit report and bumping up your score for your Model 8, again, not really doing anything for your mortgage, but it may help for maybe getting a credit card, or maybe if you're looking to get into a rental. But in the mortgage world, it really wasn't doing you any good. And again, you're giving your banking information to someone.
Yes.
To me, I think that's a little bit risky nowadays with all the data breaches that you hear. But so it wasn't really helping with your mortgage score. So the Experian Boost, we really don't recommend that for a mortgage standpoint.
Going back to, you mentioned it earlier, you were kind of talking about people that may have had some things happen to them. Their identity was stolen. People go out and open up credit cards or bank accounts and all that kind of stuff. How do you guys go about attacking to get that kind of stuff removed? It seems like you're stuck in this very difficult mess, right? It's like a hornet's nest.
Yeah, it's unfortunate that someone can steal your credit so easily, and then all the work is put onto you to clean that up, and it can damage your credit overnight. So we do take on identity theft cases. There is a process that we have to follow. Typically, our clients, we make them file a police report and fill out a theft affidavit that's notarized. We then have to send that to the credit bureaus. If they do not remove it after 30 days, this is where we have the attorney partners that can step in and start their process. In those cases, I believe they can get an award of up to $30,000 per item that's not removed. They have one client right now that I believe has like 4 items that did not get removed. So they're
Wow.
scheduled to get like $120,000 back in their pocket. That, again, it's no money out of the pocket for our clients, but they do charge a fee, a portion of the award that you get. But there is a certain process that we do follow, and we have been pretty successful in getting those kind of items removed. If they are legitimate identity theft cases, you do run into where it's a family member that may have stole their identity.
Yeah.
Someone like that right now doesn't necessarily want to file a police report on their father, so they're kind of stuck in a hard spot, and they've decided that they're going to try to settle those accounts because they know that they're affecting their credit, but they don't want to go after poor old dad in that case.
Yeah, that doesn't sound good.
No.
So when it comes to identity theft and doing that, what is kind of the number one thing that you would say to protect yourself from that identity theft, somebody going after your credit, opening up credit cards and things of that nature?
So you can call the bureaus and put a freeze onto your credit report is definitely one option. So that way, if someone does want to pull credit or get new credit, it doesn't automatically go through and they have to contact you. And that freeze can be removed at any time. We do often suggest doing something like the opt-out pre-screen too, so you're not getting all those solicitations in the mail where somebody can maybe take that out of your mailbox and have a certain code to go and apply for credit. So the opt-out pre-screens is super easy system where you just go online, fill out your name, I think social, date of birth, takes about 5 minutes to go in effect, but you're not going to get solicited by all those junk mail offers. And then just being really careful, again, about what information you're providing on the web. So that's where most of the people are going to capture that information through data breaches. Again, going back to that Experian boost, why I wouldn't necessarily recommend handing over that kind of information to a big company that is known for having data breaches.
Yeah, and speaking of the opt-out pre-screen, how else does that, I mean, that's a huge thing. And I've heard that they're talking about making it to where you have to opt in.
Yes.
To get on that. Who's going to opt in to getting solicited?
Who knows? But yes, so the opt-out pre-screen, so out there, the credit reporting agencies are allowed to sell your information. So that's how they make their money. They sell it to companies that want to extend offers of credit to you. So when you go and have your credit pulled by, say, your lender, then all of a sudden all of your information is sold to maybe others in that industry. So it's very common that when someone has their credit pulled for a mortgage, all of a sudden they're contacted by, 10 different other companies, and consumers start getting confused. Who am I working with? And it's just a nuisance. So that opt-out pre-screen is kind of like your do not call registry for the credit industry. So it stops your information from being sold. So when you go on to opt-out pre-screen, I believe it lasts for 5 years. You can opt back in at any time. But yes, you mentioned right now they are having lobbying efforts to switch it where a consumer would have to opt in instead of opting out. So we don't know where they're at that process. I know it's a big topic that a lot of the people in the mortgage industry are pushing for because it is very confusing to the consumers. And again, just a nuisance to have to deal with all those calls and letters. So we'll see. Well, maybe next time we talk, we'll have a better update on it.
Yeah. Now, with opt-out pre-screen, it's completely blocking them from having their information sold.
Correct.
Right? So it was probably about 2022 that I noticed this kick, like it really ramped up in a big way, probably the beginning of 2022. And I pulled somebody's credit and the guy called me and he was angry. He's like, I've gotten like 35 calls today.
Yes.
He's like, my phone won't quit ringing.
Yes.
And I was like, I don't know. He was mad at me. He thought I sold his information and all kinds of stuff.
Yeah.
And I was like, I don't know what's going on. And then it happened again. And I was like, I got to get this fixed somehow. And then that's when I found that opt-out pre-screen. Was there something that changed?
Who knows? Maybe with COVID and a lot of people doing things at home or online, I think that might have been a catalyst to it. But yeah, we did definitely see an uptick. I've seen a lot of lenders now have the ability to do a soft pull. So talking about inquiries, people get, oh, well, it's a soft pull, what's a hard pull? So the soft inquiry, you're not necessarily having that information that's going to be sold and available on the market for the credit reporting agencies to resell for you. So that has been a plus that I know a lot of lenders have been able to do that. And then couple that with doing the opt-out pre-screen, because it does take a couple days to go into effect, and not everybody has a couple days. They need to get pre-approved. They want to go out shopping. They want to know what they're qualified for. So it's nice that lenders have that ability to do that at first and then give it the 5 days. So then when they go and actually do a hard credit pull, that their information is safe and not going to be resold. Yeah, I heard a story once of a lady. They pulled her credit and was for a very specific like construction loan that not a lot of people can even do out there. She got 99 calls in one day, and I think of the lenders that even contacted her, maybe only 2 could even offer her that kind of product. So it was very angering to her, like you said, that you think, oh, you're the bad guy. What? All of a sudden, I hand my stuff over to you, and I'm getting all these calls. What did you do? But that's just how the law is written, that they're able to sell your information unless you opt out.
Yeah. So you mentioned soft pull, hard pull a few different times. What is the biggest difference between a soft pull and a hard pull on the credit?
So a soft pull is typically when you pull your own credit, or credit is pulled by somebody that you already have an existing relationship with, like a bank that maybe is just looking to give you a credit line increase, or maybe it's for like a background check for employment. So those are not going to affect your score. We know inquiries, any one inquiry can drop your score maybe 1 to 5 points, I think, for a total of 20 points that you can lose for inquiries. So when you do a hard pull, that's typically when you're applying for a line of credit, a home loan, a car loan. So you're out seeking to get credit, and that can work against you as far as dropping your score. There are shopping windows for, I know, mortgages, and when looking at the mortgage FICO score, I believe the shopping window is 30 days. So if you have one lender pull it on day 1, you have up until day 30 to have multiple other lenders pull it. So you're able to rate shop or just see who you want to work with, and that those multiple pulls will only count as one pull. So at the most you're going to lose is maybe 5 points, even though you may have 10 different lenders pull it within that 30-day window.
Okay. And what are some other things that, let's say you do pay your bills on time, you do have good credit, why does having a credit card that's maxed out? So let's say you just have a small credit card, let's $1,000 credit card, but you have $999 on there. Why does that affect the credit score so much?
So with FICO, I talked about there's different factors that go into determining your score. The number one factor is your payment history, which is 35% of your score. So that's paying your bills on time. So obviously it's very important to pay things on time.
Yes.
And the next largest category, which makes up 30% of your score, is credit utilization. And when I say credit utilization, that is comparing the balance that you hold on your credit card compared to the limit. So ideally, FICO, you're going to earn the most amount of points in that category if you can keep it at 10% or less. I know a lot of people used to say like 30% or less for utilization. So again, your example of $1,000 credit card, most people think, oh, keep it $300 or less for a balance. Ideally, $100 or less. So they want to make sure that you're managing your credit well, that you're not maxed out on all your credit cards. Again, it's just a way that they are determining risk factor. I get a lot of people go, though, I have to use it for work. I pay it off, though. Every time I get my statement, I pay it off. But for some reason, my score doesn't go up. My utilization's very high. So there's one little trick that I let people know is when you get that statement, whatever date your statement comes out on, typically the balance reported on that statement is going to be the balance that gets reported to the credit bureaus.
Okay.
So if you're paying the balance after your statement comes out, which most people do, they wait for their statement and then pay it by the due date, really it's going to be reflective of what that balance is. So if you pay it off, you're not getting the credit of paying it off. So if you're really looking to boost your score and you want that utilization down, I tell people, determine when that statement date is, go log on to your account maybe a week or so beforehand and pay that balance off before the statement even comes out.
Oh,
so get it down to that 1 or 10, between 1 and 10% range, or even pay it off. And that is how you're going to kind of cheat the system there.
Okay. And there's all these people talk about like hacking your score and paying the bill twice a month and all this kind of stuff, and it shows more payments and it shows a quicker. Is that even a thing?
I think what it's showing is you're paying the balances down before that statement date comes out. So I think that's really where you're getting it. I don't know if it's necessarily making more payments within a statement period, but if you are making more payments, maybe you're paying off your credit card a little bit faster. But essentially, they're looking for that utilization to be under 10%. So obviously, if you're making more payments prior to that statement date, you're helping yourself in that aspect of it.
So what are some of the biggest myths versus reality when it comes to credit repair that you guys can do for people?
So I think a lot of people think, oh, if I just pay collections off or whatever off, it's just going to disappear from my credit. So when we talk to people and they don't understand, I paid everything off, all these derogatory items off, why are they not disappearing? So they are legally able to report negative items for up to 7 years. So what we're able to do then is go in and dispute it in a way where we are talking about whether that information is accurate, if it's erroneous or not complete. Those are the 3 criteria it has to be to have it removed. So if information is incomplete, erroneous, or not accurate, then they have to remove it. So we know with the certain banks or creditors or collection agencies how to read the credit report and dispute it in a way where we're going to have a higher success rate than somebody would trying to dispute it on their own and just claiming fraud. There's a lot of agencies out there, that's their method that they'll use. They'll just say everything is fraud because they will have to remove the account temporarily while they are investigating if it's actual true fraud. And so these people think, oh, it came off my credit report. Then they go back to you, and then all of a sudden it pops right back up at closing. So we want to make sure when we are disputing items that they are coming off for good. Yeah. So we are making sure that the items that need to be paid get paid. We see it all the time where utility accounts or things like cell phone collections, those have a habit of jumping around and being with one collection agency, getting recalled, so then all of a sudden it gets removed or we get it removed, and then all they do is place it somewhere new and it pops up as a new collection. So we are guiding our clients through what items to pay, what items not to pay, because we want to make sure we're keeping as much money in their pocket and being strategic about it as well. And then being able to dispute the accounts in a way that they are going to be removed permanently from their credit report. I do all the debt negotiations in the office. I've been in the industry, I think 20 years now. I worked 10 years in collections and with a debt buying agency, so I know the ins and outs of that industry, and I've developed a lot of contacts with all the major banks and collection agencies, so I have a really good idea of who will settle for what. Most, I would say, credit card agencies around 50 cents on the dollar, debt buyers probably a little bit less, and I know who will give me a deletion as part of that settlement. So I come in with the expertise of making sure I know how to save you the most amount of money and hopefully getting it removed instead of you going and paying it on your own and then after the fact us trying to get it removed, which is a lot tougher. So if you can negotiate the deletion along with paying it or settling it at that time, that is going to be more advantageous for the client. So we want to make sure through our risk-free consultation that we are identifying those items, letting them know what to pay on their own, what allow us to negotiate for you, or what to leave alone and let us just dispute it.
Okay. And some other things that you do for people, do you help them? So let's say you have somebody that's fresh, brand new, doesn't have any credit. Do you ever guide people on to how you can get a credit score and how you can start to build credit?
Yeah, so while you're working with a case manager in our program, they are very well educated on how to get a credit score up. And some of the items are just things that, yes, the client has to do on their own. So if you are lacking credit or good credit, some of the things that we can do is point you in the direction of getting a secured credit card. The secured credit cards that we have access to typically can report in as quickly as 7 days to your credit report, where some can take 30 or 60 days if you go through maybe your local credit union. other items that we can suggest them to do is getting added as an authorized user. So if you have a friend or family member that's willing to add you to one of their credit cards, you actually inherit the credit history of that particular card. So if you're lacking any kind of credit history, maybe you're new to the credit world, because one of the items that they look at for a credit score is your average length that you've had your cards open. So if you're brand new and you've only had a card open for 6 months, you're getting dinged in that category, which I think is like 15% of your score. But if you can ask mom and dad to add you onto that American Express they've had open for 25 years, they've always paid it on time, they keep low balances, now you've inherited that whole credit card and that history of 25 years onto your credit report. Nice. So a lot of people don't know that that's an option. Not everybody has the family member or friend that's willing to do that, but that is an option. Some other products we have are credit card builder loan accounts. So another aspect of a credit score is going to be having a mix of credit. So they're looking at maybe having 3 credit cards and then an installment loan, something like an educational loan or an auto loan. And so somebody might not necessarily have an installment loan. So we have a product where you pay into a savings account and it actually gets populated onto your credit report like an installment loan.
Wow.
And then you are saving money, and then after a year, I believe you can withdraw that money and use it for maybe a real estate purchase. So not only are you learning how to save, but you're adding to your credit by adding an installment loan. So yes, we're walking them through courses of action that they can take while we're working on the things that we do. We're going to educate them on how they can make their credit score healthy as well.
Okay. Now I'm going to go through a scenario with you real quick. All right. So let's say I have a guy comes to me and I pull his credit and he's a 560 credit score and he's got some things and it looks very promising that you guys can do something for him. I refer him over to you guys. What is it how does the process work when they come to you? What does it start with?
So it starts with the risk-free consultation with one of our credit advisors. We do that over the phone and we go over their credit report with them. We identify the items that we can work and then identify the items that they can work on. If they agree to come into our program, on average, clients are with us about 4 to 6 months. It's a flat monthly fee that they pay, and we're going to initiate the disputes on their behalf. We're also going to keep your lender or real estate agent that referred you over up to date with what is going on, what accounts have been deleted. You're going to get updates at least every 35 days, sometimes sooner. And so as we're identifying objects that come off your credit report, where you started credit score wise, and once we think we've gotten enough items removed where you might hit that mark of where your lender needs you to be, then we're going to hand you back over to your lender to have them actually pull the credit again. So you get one point of contact, so you're not in a call center experience where you're calling and talking to somebody every single time that you call in. Your case manager is going to be your one point of contact.
Just one. You don't have to deal with a whole bunch of people. You don't have to tell
your story all over again. And we know dealing with credit and finances, it's a sensitive subject, and our case managers are very well aware of that. We're very sensitive to the needs of our clients and walking them through the process. Because buying a home, as you know, that's one of the biggest purchases you're going to make. And so we want to help ease their fears with their credit and getting the loan approved. So, they have their one point of contact. Unless they have debt negotiations, then they'll have myself as a second point of contact. They also have access online to a portal where they can track what's going on. They can upload documents. They can communicate with us through that portal. But we're also calling and texting them all throughout the program.
Okay. And what are the different departments? So you mentioned a couple, right? So you have your case manager. They handle maybe just the dispute stuff. Mm-hmm. Then you have debt negotiation be something that you handle. Yeah. Plus you have the attorney down south, Southern California down south, that does that. What other departments are?
So we have our credit advisors. That's going to be your first point of contact that does our consultations. Then you have, the case managers who are going to be in charge of doing all the disputing with the credit bureaus, myself for debt negotiations, and then, our attorney partners down in Southern California that are going to take on our identity theft or FDCPA violation clients. So that's
Okay.
essentially our departments that we have at Blue Water Credit.
And you guys have grown. So it was Jeff, and who else started the company?
So Jeff and Natalie, husband and wife, 15 years ago. And if you've ever heard Jeff's story of how he got into it, that he went to apply, I think just to open a checking account, and he got denied. And so he's like, oh man, what do I do? And so he went and learned how to fix his own credit. And then he started helping friends here and there fix their credit, and really saw a need for it in his community, and started Blue Water Credit, with the idea of being able to serve his community, help people become homeowners, and just really do it like the legal and ethical way. Again, I understand that our industry sometimes can have, a icky feeling like, what are you doing? What am I paying you for? Are these things really disappearing from my credit? Are they going to come back? And unfortunately, there are a lot of bad players in the game. We make sure that we're registered with the DOJ. That's a requirement now. We are accredited with the Better Business Bureau. I believe we're the only credit repair company in Northern California that we have the accreditation. We have an A+ rating, hundreds of 5-star reviews on Google and Yelp. We really strive to make sure we're providing the best possible service for our clients, where they walk away happy with our service.
Yeah, it's funny. I'll have people come in here and talk about, hey, check us out, we're this or that, and I get calls for it, and I'm like, but Blue Water's always treated me good, and they're right up the street. I don't want to use you.
Yes, and we always try to offer, education to the people that we work with. I do a lot of seminars, either in person or online, for lenders, real estate agents. We're all about equipping you guys with more knowledge so that you can work with your clients and do certain things that they don't necessarily need to come to us for. We do a lot of home buying seminars or first-time home buyers, so we're offering education pieces to the actual consumer out there as well. So we're all about making sure that we're giving back to those that are entrusting us with their business or with their own credit.
Yeah, I do I have a portal. I could see the clients, what they're going through. I could see what's been deleted and that kind of stuff. How do you track deletions if you're not able to do constant soft pulls, or do you do soft pulls all the time?
So we have the ability to do soft pulls. We do usually have the clients set up free accounts through the bureaus where they're going to get the updates. Back in the day, we used to get letters from the different credit reporting.
So there's no more letters
anymore?
anymore?
I believe since COVID, it's kind of gone away with the letters. So it used to be you told the clients, watch out for that plain white envelope in the mail. Those are going to be your results coming in the mail. We rarely see those anymore. So we are typically getting results through walking our clients through getting the free online access to Experian, Equifax, or TransUnion, or paying for the services through like MyFICO or Identity IQ, just because we can get updates quickly that way. We do have access to, again, TransUnion. We've been able to even do instant deletions with them in certain cases where we can dispute something and it comes off in a matter of minutes, and you can even pull a new credit report later that day. So we do have ways to get into the systems to see if things were deleted, just not necessarily pulling their credit for score purposes.
Yeah, I have a great client. I know this is kind of a little bit off the subject, and he's bought, I don't know, 3 or 4 houses in the past few years. Mm-hmm. And the lender that we placed him with sold the loan, and he made the payment, and they marked it late. And we got that taken care of for him. We did it just on our end. Hey, this was done. Here's the proof. Here's the check. Here's all that kind of stuff. It comes off of his credit. Then about 2 weeks ago, we pull his credit. It's not on there, but somewhere on the back end, it still shows that this has been a charge-off on a mortgage.
That's interesting.
And I have all the documentation that it shows that it was charged off, and we fought like heck again. We got that removed again, but somewhere on the back end it is showing this. Is that something that I could get over to you for you guys to be like, hey, what is this? And can maybe the people down south can help him out? Because he is a fantastic client, one of the best guys.
Yeah, absolutely. It sounds like something went wrong in a system somewhere and marked incorrectly. So that is, where our expertise comes in, depending on maybe who the bank was or who held the mortgage. Our case managers have probably worked with that company before. So they know directly who to go to, where, you as, their agent agent or the consumer maybe might get the runaround, not know the lingo, how to talk the lingo. I mean, every industry in real estate lending, we all have our own language that we speak. And so we know exactly what to say and what documentation that they're going to need to get those type of things removed. So it sounds a bit like a very unique situation, but I wouldn't be surprised if it's something that we've run across before.
Yeah, I really want to get this guy taken care of.
Yeah, and it doesn't hurt. Like I said, our consultations are always risk-free, so it doesn't cost anybody anything to at least, talk with one of our credit advisors for 15, 30 minutes to see if it's something that we can help with. And if we can't help with, hopefully we can point you in the right direction.
Now, one of the questions I get all the time when I'm saying, hey, you should call Blue Water Credit, and then I'll do an email introducing them to you guys. But the question I always get is, how much is it going to cost me?
Yep.
How do you guys bill? What does that look like?
So, like I mentioned before, there's certain regulations in place on how we can bill and collect fees. So there is an initial enrollment fee for anybody that joins our program, whether you do our traditional credit repair or our debt negotiations. On average, I believe for a single person, it's around $249 right now, and that just covers all the setup, getting the initial dispute set out, and then on average, it's probably around $180 a month for a single person per month. And then again, like I said, most clients are in our program 4 to 6 months, and then of course, if you're lucky enough to have one of the items that the attorneys can work on, you can maybe make that money back and actually profit from being in our program. We also offer a discount if you come in as a couple. It can be a husband and wife, father, daughter, cousins, roommates. I've seen it all. So if you come in as two people, instead of being an average of like $190 a person, you're talking more like $290 for the two people.
Okay, perfect.
But they will, when you do your risk-free consultation, when we're done, you'll know exactly what your program costs. It doesn't vary too much on the monthly fee. A lot of it just depends on how many accounts that we're disputing. So if there's a minimum amount of accounts, maybe under 5 accounts, it might be a little bit of a discounted pricing on the monthly forefront, but anything over 6, it's probably going to be around that $190 or $290 a month mark.
Okay. Perfect. If anybody listening to this, watching this, wants to work on their credit and stuff like that, how do they track you down?
So probably the best way is you can visit our website. It has all of our contact information on there, which is bluewatercredit.com. You can request a free consultation through our website, filling out a form, or you can call us directly at 916-315-9190. Our admin team is great. They'll get you scheduled as quickly as possible with one of our credit advisors to get you in for that risk-free consultation.
And say Chris Kennedy, because I'm the one that referred you.
Yes.
Awesome. Well, thank you so much for coming in today.
Yes.
I really appreciate it. This was good. I'm glad that we got a lot of information out that how you can help people, and I think you should probably get the word out even more because a lot of people need this.
Yes, absolutely. Well, thank you for having me.
You got it.